Hey everyone, welcome to your daily update for BTC SOL and anything else we throw in there. Looks like we were pretty spot on yesterday with flush soon as a title. So we went into a banking holiday. The books are as thin as they're ever going to be, and just before close, you'll notice in just those moments before they actually closed those various timeframes, the sell pressure just kicked in, drove the price down to structural undesirable levels, and closed the candles, and that basically kicked off the dump that we are still in now, really. So let's have a look at this liquidity. On the 1 day, it looks like it's going to come down and tag that 106 area on Bitcoin. Probably lower actually if this continues, but you do tend to find Tuesday's trend can reverse, so I wouldn't bank on it going continuously down from here, but they've built enough resistance at the upper levels now that it looks like it would be pretty hard for them to drive it back up in one quick motion anyway. To the upside, it's still sort of around that 110 area that they might go tag just on the daily. SOL seems to be developing between around 190 and about 206. And there is a 4-day close today that might close just above trend unless they continue to sell it down. But if it closes just above trend, it could bounce that trend and actually go back to 206 because it looks like they're going to create a hold level. As always, there's 2 hours to go, and as you can see from yesterday, they can flip from having things like 9-day support that are going to send the price up, and in the last probably would have only been about the last half hour of the day, they managed to sell it down so heavily that it just completely destroyed any support that had been generated. So let's have a look at the 7-day. So 7-day is showing still around those 105, 106 levels really on BTC. But there is that bit forming there now, sort of around 104, and there is a bouncing or a level, hold level around 104. So they might be trying to build up for that. Maybe they go down and then up and then come back down again because people aren't going to really long if the price just keeps going down. I know they say everyone chases the dip, but it's not really how it works. People start to long when they see the price actually reversing, so that's why you might see it actually just go up a little bit before it then actually rolls over and comes back down. But as it currently stands, probably one of the more concerning things is that some of that higher liquidity up around the 117 mark is starting to get almost forgotten on these lower time frame charts. So a push back to 113, 114 might be doable on the 7-day. But at this stage, I wouldn't really aim on them going past about 110. It seems ultimately like we're going to start going into a bit more of a flush than what they've currently done. SOL still has plenty of liquidity to the downside, all the way down to sort of the 180s on the 7-day, and it could head anywhere up to the 220s still. The good news is that both SOL and BTC are starting to line up. So beforehand, you had everyone was way too bullish on SOL, and everyone was too bearish on BTC, and that kind of imbalance makes it really, really hard for the two things to actually move predictably, whereas now it's starting to actually even out, so you can see more shorts are coming into play on both. If we have a look at the 30-day, and 30-day, same sort of thing. There's 170s would be the bottom of the 30-day on SOL, and still really 220s if they went to the upside. And BTC, same sort of thing. Still really 106, 105, 104 sort of levels to the downside. And you can see that liquidity all the way to the upside up to sort of like 120. the old Twitter narrative is kicking in with, how many people will be liquidated if the price goes to 120 billions, and all that kind of stuff. So, the narrative is getting built for the short squeeze, but that also just means that more people start to jump in with longs because they're expecting the short squeeze, and that just means more downside before we get the short squeeze. So, all things considered, there's still probably a little bit more bearishness needs to kick in on SOL before it really evens out with BTC on this time frame, but it looks like it's getting there. So that's a start. If we have a look at the games they've been playing, so you can see that BTC's been holding up a bit better than SOL. So that's that strength retracement that we talked about, and I probably expect us to clear all the way down to sort of like this 191 level before you might actually see these two really start to even out. But a lot of it comes down to how much they push it down today before close, because the way to keep the price just falling and falling and falling on something is just to keep pushing it down under trends, open the next candle under the trend, reject off the trend, and just keep going down. And that's sort of what we saw yesterday, but it's also it shows that they're almost trying to hold BTC up a little bit more, and whilst the alts are taking a bit more of a punish now, everything coming back into balance. So there's not too much to be drawn from this other than the short-term liquidity is now sort of only showing up to about 113k on Bitcoin, which sort of means that we might get a bit of a relief, and then we get a further dump. And it's getting really, really dense liquidity down here around those 104s, and that 189 level is on the board down the bottom there with the liquidity on SOL, and you've still got some sort of 100x leverage sitting there all the way up at about 205, 206 for them to take. So I think that might be the next sort of move is going to be to come down here, tag something in this lower 190s to 189, and then maybe have some sort of relief up there, because there is a bounce level on BTC that they sort of have just avoided touching by about $100 this whole time, and they've been avoiding it ever since back here when it was sort of the first time it went down to around 107. So can't help but wonder if it's just sort of hovering above that level because it's going to hit the actual bounce level, then bounce back up, and at the same time you might find SOL hits something a little bit lower than where it is now, a few dollars lower, and then bounces back up to take that liquidity. So we'll see how that continues to play. So let's have a look at these charts. So the SOL strength on the daily is retracing, so it hard closed that level. We talked about that the other day, so it should be coming back at least to the 17933 to retest the hard closed level. The question is, what does it do then? So it's a hard closed origin level, so once it hits that, it could bounce, or it could, unfortunately, in the next 1 hour and 53 minutes, they could push it down underneath that level. And if they open the candle under that level, it could hit the backside of it and then come down further to try and break the trends. So we've already retested these levels down here at 17153 and lower, but it doesn't mean that they don't just have another go and keep going to try and hit some of these trends. We will lose the interior uptrend today if this candle closes blue, and if they just keep with no wick on the bottom of it like it currently is, then when the trend moves, it'll just open on the wrong side of the trend, and it can just keep on free falling. So as it currently stands, 1 hour and 52 minutes to go, looks pretty bearish, but a lot can change. It could tag this level, move back up, create a wick on the bottom of the daily candle, shift the trend, bounce off the trend, and then target the upper levels again. So you really just don't know until it closes as to what they're up to. And you'll notice today that this stage of the dump that they're in now kicked in, at that sort of 8 a.m. UTC, and that's when you've basically entered the lowest liquidity time between markets. And so we started it on a banking holiday, so no US market, and then we continued to dump instantly and hard out the moment we went into that algo period where the 24/7 algos that sort of operate the various different markets, and they still operate in crypto on weekends and all that kind of thing. They're just not doing anything right now. They shut down when the market shut down, even on the weekend days. So this is just that time that basically is the cheapest and most effective time to pump or dump the price. So as I call it, this is whale games. So I'll have a look at this on the weekly. So weekly is pushing into the trend. It's got 6 days and 2 hours to go on that candle, so it can just keep coming down. The weekly retest actually would be to come down to these 16799 levels because they're all hard closed, and even that 16528. So much like the Trump dump we saw, months and months back with BTC, we can come all the way down here for 6 days. We can hang out down here for 6 days, and then we can go back up again, and that's all just normal. Meanwhile, everyone capitulates in the lows and sells. So now, if we look at the monthly closed above the range trend. It should come down and tag at least these 17895 sort of levels. It hasn't hard closed anything, so it can just keep on going down, and there's plenty of time to go on that monthly candle. But this is that thing we sort of predicted. Closing in between the 20232 level and above the range trend, it was really just going to have to go one way or the other. But this hold level up here on the monthly is a target. So it's a target for any kind of trend. And so if we hit this trend, that would be the most bullish scenario, as we hit this one that we're nearly at now, and then we bounce back up here and SOL suddenly gains a whole heap of strength and pushes back up, which will reject when it gets to that 20232 level. So it wouldn't be a forever pump, but it would be a reversal at least until that point. And of course, the most bearish scenario is that it just continues to travel all the way down to the monthly trends that are down in those 1.6s and 16297, that sort of area there, and then pushes all the way back up. And depending on how long it takes, if it does it within the month of September, it's not really a big deal because it started on the top side of the trends. But if it stays down there for the month, closes down there, then everything up there becomes resistance again, and it has to try and work its way through it, which is definitely more bearish and would indicate that maybe we should have called the bear market. All right, let's have a look at our safety assets. Yep, so safety assets look like they're going up to retest. They've never actually lost this range up here, unfortunately, because none of these are actually a hard close under the range. So looks like we're probably going to head back to 65.62%, give or take any other little bounces that we might get with that in the meantime. But yeah, we have not actually lost the downtrend range because we've just been bouncing off the backside of it. And we've not lost the range below because we didn't do a hard close under it, and we've hit that break level at 64.14% and we're bouncing back up. So yeah, this is pretty bearish when it comes to altcoins, but it should make it to at most around that 65.62% and then have some kind of rejection off that, and that candle's got a couple of days to go. So all right, let's have a look at our totals. So we're bouncing off the trends on the totals. So this trend has moved to there. So we're diving that. And so this level that it's just hit now is a origin level from the very beginning of all of this ranging. So this dates back to sort of like the 16th of July on the 1 day there. So you have your 2 candle range. Your range is hit here for the first time and on the break, and instead of the break breaking and leading to lower lows, the price ends up going to all-time highs. Now this is the first retest of that origin break level. So there is absolutely nothing that's stopping this from going to all-time highs from where it is now based on this, other than time. it's not an instant thing for these things to reverse. So, but it's pretty positive that it comes down and it hits that origin level in line with trends from above the daily trend, the current interior daily trend, and this is a really, really condensed area of trend. So where would I expect this to go? Well, if it closes here, it's already tested the hold level at 340. It's not a hard close of any of the ranges that exist in there. So heading back up to 349.7 to the hold level, or which would also mean potentially a retest of the trend. That's kind of where I'd see that going. We'd have a interior trend there, which might get in the way. I mean, it could push through that. That's only a little bit to have to push through. It could also retest the backside of this range here, yeah, 347. So 347 or 349 would be pretty suitable bounces on the daily for that. So actually looks, as far as the total market cap goes, it actually looks like it's a pretty critical level, but that they would have to push down below 334. 0.34, or worst case push down below all these trends and open down there at 331.91. If they did that, it would be very bearish. You're basically just going to knock it off a cliff. If that happened, you'd have to come down and test these lower ranges down here in that sort of 284 through to 320 area. So let's just hope that doesn't happen, because otherwise that would be one heck of a move to the downside. It's basically just free air until we sort of get down to some of these lower levels. This would be the critical one that would potentially hold it at about 284. So yeah, keep an eye on that level for close. If they wanted to really dump the market, it's going to be a case of getting the price under there and opening the next candle under this area here. And let's look what else got going on. So the weekly totals, they're just sitting on support. This doesn't really mean much in the scheme of things. We hard closed a level, we've retested a level. I'd expect this to come back up. So either to retest the backside of this range trend at some point in the next 7 days, or to go up to the hold level somewhere in the next 7 days. So it doesn't really look too bad. I mean, it can keep diving. Probably this level down here at 3.23 it's kind of just sitting there asking to be retested, because it's never been retested since it was closed with these candles up here. And it's about the 50% of the range. So if we consider the bottom here at about 2.79 and the top up here at 3.93, and that's a bit of a liquidation sweep. So if we go back to the next candle, about 3.72, then the halfway point of the range is about this 3.24. So yeah, a dive to that and then back up again in the next 7 days would make a bit of sense. All right, let's have a look at BTC. That's not a great place for them to close BTC. So much like yesterday. So this is the level here at 107, 105.9, and they nearly went to it, and then they didn't. So it's not the first time they've done that. Same thing over there, where they nearly went to it and then didn't. As far as other levels, this is an origin daily level here, and it's just sort of been bouncing across it. So good and a bad place, really, to be closing. We're below the current daily trend. Now that means that the next candle is capable of breaking that trend, and it also means that this candle that it's on now doesn't move the trend, and because it doesn't move the trend, we don't have daily trend support where we are. We're basically on the verge of losing that daily trend support, and then it would all come down to how big the wick is, etc. But the other side of it is we could just come down and tap this hold level and travel back up. So there's potential that we reverse once we hit this. They may be waiting for the daily close just so that they can dive down deeper and have more time before reversing off that one. The other side of this would be that because we haven't actually lost that daily uptrend, there's nothing to stop the next candle from coming back up. Maybe testing the break level of this range formation, which would be up about 109, or still going all the way back to the hold. What we haven't done, which is a little bit abnormal for price action, is we haven't retested the hold level, even though we've bounced off the trend. And part of that is because we got stopped by something else that's sort of running through here, which was obviously a little bit bigger than a daily, but this is still going to want to come back up to here. And the main issue with it getting to there now is just the trend. So this looks like it's just being sold down, but should reverse and give a little bit of a pump at some point. And we were sort of waiting on one more day of trend break as far as our cycle trends go on the daily before you'd really expect a proper daily reversal. So, does it come tomorrow on the next candle? Maybe. It might hit this, go back up, close, break this interior trend, and then once it's done that, it can work its way through here. But there's so much resistance and support levels that are all between this 111 and this 107 area. But if we lose that 107 area, it becomes a bit more of an air gap where we've got things that are sort of around 106, then 104, and then sort of 102, and then it becomes sort of like $2,000 gaps once we start to lose that. So it could fall quite quickly and do a decent sweep. So the 2-day close today. So 2-day close is most likely going to close down, but still inside the range, as long as it doesn't drop below 107.465, which only means they've got to dump it by $500, in the next hour and 39 minutes. And if you saw what they did yesterday with the dump, well, they can do that. So really it comes down to how it closes. Now, if it closes as you see it here, it's got a good wick on the bottom of the candle. We've got some distance between us and trends. We've already rejected off whatever that level was in there. It was a hold level at some point, and we've got another hold level up here at about 111. So if we move the trend to the underside, it's no different than the 1-hour scalps I was posting the other day, or the 4-hour scalps. It's just a bigger time frame. So if we move the trend to the underside, we can bounce the trend and we can travel back to the holds. So that would be your 109, your 110, or all the way up here to sort of like your 111, assuming it can get its way through these trends. So this is not so bad. It's sort of indicating that we might get a little bit of a relief pump when this moves from here to here, and the fact that we're still actually inside this range. So we have got like another origin support level down here at about 100, but I guess that's to be expected. If we hit 100k, there'll be buy orders there. It's just that round number thing. So let's have a look at the 4-day. So 4-day is not really telling us anything. It's dived the trend. It's going to open on the wrong side of the trend. It could come back up to a retest. That's about 110. So I guess that gives us some confluence with that 110 area. And this is our hold area down here on the 4-day, so 104k. How this travels, it could work all the way down here and then come back up to do the retest, or it could come back up, do the test, and then dump down to the hold level. So this will be a hard close of the range trend, and it will also be a hard close of the 4-day range at 112.6. So you've also got to throw in there that those ranges might get a retest, and that brings you back up to that sort of 112 area. So there's plenty of reasons why this could bounce. The things that might keep it down is just the fact that it's closing under trend. It's closing under an origin level here at 108, 849. So yeah, and it's closing back under a break level at 110,370. So any of these things, I must delete that whole level now, it's not relevant, but that was its bounce. That big wiki candle there was the long that you could have taken on that. So yeah, this is currently trend diving. You would expect a retest of one of these levels, but it could be as shallow as a $800 retest. Really, it could be just a retest of that origin, which is the most bearish scenario. The most bullish scenario is you get a retest all the way up to about 112, which is yeah, there's a lot of confidence in that retest. It's an RT. Actually, there's another one in there too. So also got this one. Yeah, so it's losing that. So yeah, most bearish scenario is that retest of 108, 800-ish, and then a dump all the way down to 104, 500. And that's pretty realistic if they want to be bearish. It could be why they're trying to keep the price in this area, hit this, come all the way down to this. Or if there's enough longs to liquidate sitting in this gap, they could come all the way back up there, do a retest of that. It's still a lost range at this stage, so expectations to get back over 112, unless it gets to spend a bit more time above this trend, the expectations of getting back over 112 at this stage would be pretty small based on that time frame. And onto the bigger stuff. Rejecting off these. There's a lot of, I said in the Discord earlier today that maybe it's time to stop ignoring this 85 level, because there is actually a lot of high time frame rejections going on at the moment that can bring it back to 85k, and there really is just this ginormous high time frame air gap because of how price moved up so quickly. So coming back to 85k is a possibility based on a lot of factors, but that's all that's really telling us, is that 61 day says we could go to 85k. We're going to get this interior trend form today, and we're going to be on the wrong side of the trend. So we're already rejecting off one trend, and then if we open on the wrong side of this trend and then we come back up here, we could come up to anything between where we are now and sort of 117, and then come all the way back down to 85. Very possible. And more high time frame stuff, all showing the same thing. We could open and just drop to 85, 86, and then travel back to 117. This is kind of a really poorly drawn channel from the looks of things, but you know, none of this stuff quite works out perfectly when you're dealing with timeframes of this sort of size. But yeah, it's rejecting off the trend. The support for this time frame is sitting at about 87, anywhere between sort of 85 and 87, along this trend line here. And the resistance, if it went back up again, is about 117. We really need some kind of tweet or something to make Bitcoin dump like that. Otherwise, people just wouldn't feel it's justified. But that's what structure is saying. It's saying it can happen. So, yeah, and the 1 week, I'll just show you some of these. This is what they did. Like, they dumped this candle so big that it ended up closing under these weekly range trends. And so really there's not a huge amount to hold that up. It went up, opened the new candle, went up, rejected off the backside of the range trend, and we do have this level to retest here at 106.421. So it may hit that and then come back up again, but it's yeah, it's looking pretty bearish. Just to say, if it actually follows all the way through to the next available hold level to create a range trend, that's down here at like 82. So, but it really, from a weekly perspective, shouldn't be able to get there that quickly, because it would have to bounce off some of these trends and off some of these backside levels first. But yeah, I'd say Bitcoin's looking pretty bearish, and it's building so much resistance to the top side. It's actually pretty hard for it to get back up. This is, yeah. So that was the 2 week close. The 2 week close opened slightly above its trend, but then under its interior trend. That rejection obviously was confluent with the 1 week. It's gone up, it's rejected off the backside of the weekly. It hasn't gone back to its hold level at 114. I mean, ultimately, if it bounces off a trend, it's going to try and get to that hold level, but all it's going to do, if it goes and hits that hold level from the wrong side of trend in the next 2 weeks, it's just going to reject off it. So it's not yeah, it's not very bullish at all. All right, let's have a look at SOL. Okay, so SOL has been same sort of thing. They pushed it down below trends. They've rejected off the backside of the trends. It's coming back down. Now, SOL does have a weekly range trend sitting at about 93. So if it goes down and hits this, dives this, and then pushes back up again, that might give you that move that gets those goes and basically takes out all those late shorts. So so that's that's a daily. So a daily trend at about 193. So it's currently back under a hard closed level. And it seems to be rejecting off the backside of it as if it is resistance, but yeah, realistically, I'd say that we should get some kind of action when we hit that trend. So it's, as far as what's happening, we're losing the interior at close today. So yeah, as long as they don't sell it down below 193.7 before the end of the day. If they sell it down below 193.7 in the next hour and 30 minutes, then that's insanely bearish. Like they're just actively trying to put this thing into positions where every single algo in the on the planet joins in and goes, uh-oh, losing, get rid of, de-risk, sell, short. So and that's effectively what a whale needs to do. If they want to move the price around, it's about getting it to a particular place at a particular time so that every single automated trading system out there then joins in and helps them shove it down to the next level. So if it loses this trend, then realistically your next levels are coming down more towards the 189 sort of area on the daily. So the 2-day is already being pushed down below its interior trend. It's going to lose this trend that's running through up here, but it's still above its interior downtrend. So it's sort of pointing to, as long as they keep it above that 192, 193 area, it could have a little bounce. But it's going to be under resistance. So that little bounce is going to hit one of these levels and it's going to run into some problems hitting those levels. They're also selling it down at the moment below this daily origin level at 195.231. So it could just hit that and come down to that 187 level. So overall, definitely it's an engineered dump. They're doing it very, very precisely for a reason at the right times. And then the 4-day, so 4-day is going to lose its uptrend, interior uptrend today. It's going to, at this current way the candle's structured at the moment, it's going to have no wick on the bottom of it, so it'll move the trend across to here. If it opens on the wrong side of that trend, once again, it might just retest the trend, and that could be 197, 198 even, just a really little bounce, and then down it comes. Now, it's going to also build this hold level at 206. So if they want to take out those late shorts that have been piling in as they've been dumping the price now, what they're going to do is they're going to close down, move the trend, come down and hit this range trend that's currently sitting about 191, and then they're going to move back up to that hold level at 206. Now, when they hit the hold level, it'll be from the wrong side of the trend, and then they'll reject down and they can continue going down. But it could be used as a means of bringing in some more longs to liquidate later, as well as a means of getting rid of those late shorts. So yeah, keep a bit of an eye on that. The level that they hard closed for retest is this one sitting here at 191.9. So we hard closed that on the last 4-day candle. So they might dip down, hit trend, hit that level, and then either bounce back up to the newly moved trend. That'd be really bearish, and then dump more, or they might push it through to that hold level and wipe out those shorts and then dump. So, but either way, it's looking like it's they want this to go lower and maybe have some fun and games in the meantime. 61 day is just closing in the middle. It's going to be above its interior. It's going to be below its exterior. It hasn't technically lost its uptrend. But as you can see, it's rejecting. So this would mean 204 on the top side, 181 on the bottom side, if this was to move between the two trends after it opens. Okay. We're going to get another hold level here at 189.270. We've already got this so many times. It's really just a case of waiting for it to take off. And it was never going to take off when everyone was so bullish on SOL, because there wasn't the liquidations up here to actually send the price up quickly. So what we're seeing now really is inducing everything to fill that gap to make it very economical for them to push the price up through the cascading liquidations. So that's all that's telling us. Still, it's a 247 target, and if we retest the backside of the range, it's like 163. So it's a big time frame. And just looking at the weekly again, we've got this weekly trend coming through here at about 191 as well. So that's confluent. Also, it looks like when we went back under the weekly downtrend on the daily, it doesn't look like we actually have retested it yet. So yes, that's 207, 206. So that's got a bit of confluence with it, with what we've just seen. And we have that weekly level, 191.243. Yeah, so we might hit that and then bounce back up there. So there's a bit of confluence going on there. Right. So that's about it for today. I think we kind of called the flush pretty well. And we just got to keep an eye on it that they don't do a big sort of sell down in the next hour and a half. If they do a big sell down in the next hour and a half, it's super bearish. It's basically a precise targeted dump to take this thing to Goblin Town. If they don't do that, then yes, there is a chance of a temporary rally up to some of those 200 levels, and that would be to liquidate late shorts. But I don't think you should see that as a complete reversal, not until we've seen at least that fifth daily break of trend to the upside on Bitcoin. That's probably the one to keep an eye out for. And once we've seen that, that's when we look for the entry for the full daily reversal. Yeah, cool. Like, subscribe, and hopefully you got something out of this. Hopefully you managed to get out of your longs before we took that absolute nosedive yesterday. And yeah, we'll chat again soon. Cheers. Bye.